Can the trade desk's Ventura upend the tvOS market? We discussed the key takeaways from our recent interview with Ventura SVP Matthew Henick and the tvOS's potential industry impact. Listen on.
Welcome to this week's edition of Inside the Stream. This is Will Richmond from Video News, and Colin Dixon from N-Screen Media is with me. Colin, how was Labor Day for you?
It was super, Will. We did something which I saw a Shakespeare play over that weekend I've never seen before.
Which one?
I saw Pericles, a very rarely produced Shakespeare play, and it was jolly good fun. I saw it in an open-air theatre in Santa Cruz, California. It was, as I say, jolly good fun. How about you?
Well, that's great. I actually saw As You Like It recently, and that was also in an open-air theater, and of course, all the world's a stage, right? And you and I are going to play our roles today.
We are sounding very highbrow this week when really we're a couple of lowbrows. But
exactly. Wrong impression right away. Let's get on to the right impression, which is, as you said at the opening, before Labor Day, we interviewed Matthew Henick, who is the SVP of the Ventura TV operating system at the trade desk. And on the suggestion, shout out here to John Abbott, former CEO of GBH here in Boston and good friend of mine, John's suggestion that you and I do a coda or basically review discussion of the interview, what our impressions were, because it's a pretty significant event here that's happening, what the trade desk is trying to do with their new Ventura OS. And we thought it was worth taking this opportunity, today's podcast, to share our thoughts on the interview with Matthew.
Yeah, I think so, Will. And so it might behoove you to go back and listen to that interview before you dive into this particular podcast. But if you don't want to do that, that's fine. We'll certainly reprise what Matthew had to say in our discussion. But we're going to do a couple of news stories before we get to that. So, Will, what caught your eye this week?
Yeah, so we're just going to do a couple of very quick news stories, Colin. One is that we were both impressed by an announcement from Walmart Plus earlier this week that it is offering its members, it's a $98 per year membership fee. It was launched to emulate Amazon Prime, and Walmart Plus is launching a new opportunity where members can choose 90-day viewing windows or trials for either Peacock or Paramount Plus Essentials, the ad-supported version of both, for no additional cost. So, and in addition to that, members of Walmart Plus, after they choose one of the services, they can switch to the other service at will as they choose to after the 90 days. So, pretty interesting opportunity, we think, for members of the Walmart Plus program to sample, and really even more than sample, because 90 days gives members a real opportunity to be able to watch kind of as much as they want to. But neither of us had seen this type of offer in the market before. We're both impressed by it.
Yeah, very much so, Will. And I think it's a great answer for Walmart to Amazon Prime Video because, as you say, they can choose when they sign up which one they want to watch, and then every 90 days they can switch to the other one if they want. But they can just keep the one that they have permanently. So this is a great benefit inside of Walmart Plus. And I think there's two things I'll say. One is I would expect to see other people join this program. I think this is, as I say, I think this is a great way of getting an extended free trial, and that will be attractive to quite a lot of SVOD providers as well. So I think that will happen. And the other thing I think we'll see Walmart do is step into the managing people's subscription. They're already doing that a little bit with Paramount Plus. You can upgrade Paramount Plus from the ad version to the ad free and pay for that through your Walmart Plus membership. And you'll undoubtedly be able to do the same with Peacock, and they could start managing our subscriptions, which I think will be a great benefit as well.
I agree. And you had a news item this week as well.
I did. There was an interview with Comcast CFO Jason Armstrong, and he was talking about Peacock and how it's doing. And he said a couple of things that I think were very interesting. One was that the company raised prices $3 on both plans. Now, this is a big increase. It's a 30% increase in price on the service. And he seemed to think that went well. He says it seems to be landing very well with subscribers. So I think we're happy with that, how that settled out. And basically, Comcast, Peacock stayed at 41 million subscribers in the second quarter as it was in the first quarter. Although I will say that price increase came right at the very end of the quarter. Actually, I think it was in July. I think it was after the quarter was over. So I don't know, we may still see some impact in Q3. But the other thing he said was that they're on the path to profitability, and they certainly are. But he mentioned that a lot of the costs for their recent license for NBA content is now falling on Peacock. And this is a lot of money, Will, 2.5 billion annual cost. And just to give you some scale here, that's 2.5 billion for the NBA, for their license to the NBA. Peacock earned just over 5 billion in unprofitable revenue over the last 4 quarters, and the $3 increase will only add about 400 million in revenue annually, assuming they don't lose anybody. And what I really worry about them doing their sums here, and this was sort of really emphasized to me by some Ampere analysis data last week that basically says that US sports rights have rocketed up 122% over the last 10 years, but that TV industry revenue had only gone up 24%. And what this means to me, and particularly for Peacock, is this means that more of TV revenue is going to sports rights than before. That necessarily means that for a Peacock subscriber that's not interested in sports, more of what they're paying is going to go to pay for sports, including this price increase. And Peacock will probably provide less scripted content, which may be their particular interest. So, you know, I worry about their sums, Will.
Well, that story sounds very familiar, Colin. Isn't that the story of pay TV and cord cutting, that more and more of the monthly fee is going to the sport, has been going to the sports-focused networks, and that in turn has caused a lot of non-sports or casual sports fans to cut the cord?
It totally has. You are absolutely right. And they've got to make up their mind. I think what this does is it makes pure entertainment services like Philo, the VMVPD, or BritBox, or Curiosity Stream that are really focused on education and entertainment, etc., for those people that are not interested in sports. Maybe Peacock's not going to be a good service for them, and that's probably not good in the long run.
Well, let's move on from those 2 news items, Colin, to again do our review discussion of our interview prior to Labor Day with Matthew Henick, who is the SVP of the Ventura TV OS at the Trade Desk. And what we've done here, because we and Matthew covered a lot of ground in that interview, so we're obviously not going to be able to kind of touch on everything. We are going to structure our discussion around 4 key buckets, essentially the 4 key constituencies that Matthew laid out for us. First is the TV OEMs and retailers. Second, advertisers. Third, publishers, streaming service providers. And fourth, the users. Before we get into the OEM bucket, though, we thought it was worth just very quickly touching on the question that we asked Matthew. Why is the Trade Desk now pursuing the opportunity to build its own TV OS for connected TVs? Why is the Trade Desk doing this? Why is it advantageous to the Trade Desk's core business as a DSP serving advertisers and helping them place their ad spending. So what we heard from Matthew was that really the OS is an opportunity for them to more competently be able to see ad opportunities in the market, in the CTV market, streaming market, and therefore be able to help optimize their advertisers' spend. And that is something that creates a lot of competitive advantage for the trade desk in the broader DSP marketplace. And it's no secret, a bigger and bigger percentage of the trade desk's revenue has been coming from CTV ads over the last several years. So as Matthew put it, there are a number of other things that the trade desk has done to innovate with CTV ads. So this isn't like their first bite of the apple, but what he sees is that the OS is really the right layer to invest in because it kind of underpins the broader CTV ad and streaming market and also presents the various constituencies, OEMs in particular, which we're talking about in a moment, an opportunity to differentiate themselves with a brand new business model, more sustainable business model. So we'll talk about that in a second. But that was, as Matthew described, the reason that the trade desk is pursuing this tvOS opportunity.
Yeah, and I think one of his key points there, Will, was the lack of transparency in the way things are currently running for advertisers. They're just finding it very difficult to get the data they need to evaluate the performance of their campaigns. And I think he's absolutely right there. So to move on to our first discussion, which is the OEMs, I have to say that the situation he painted in the discussion I thought was very realistic. That with the tvOSs, you have no tvOS now is neutral in the marketplace. All of them have built-in services. And the problem for the TV manufacturers that actually was kind of a problem that was handed them by people like Roku and Google in the first place, because they started selling TV devices at or below cost, is that the margins on televisions have become so wafer thin that they really can't make money in that market. So that sort of has forced them into a situation where they need to look for recurring revenue. And the easiest way to earn that recurring revenue is through the tvOS. And you do that through advertising and through charging content providers for being on the platform and for various services that you provide them on the platform. They have a choice. They can either build their own, which is obviously beyond the ken for many smaller providers. They just can't do that. It's very expensive to maintain a developer base, to maintain a tvOS and to keep it competitive in the market, which then means that they have to go out and partner with somebody to get one. The main providers, he made the point that you are making a bet that the provider that you pick to provide the tvOS will remain aligned with your core goals and give you a fair shake, a fair bite of the revenue that is generated through those platforms. And I'm afraid history is not kind here. If you look at what happened in the mobile phone space, basically the mobile phone OEMs, they get none of that revenue that's generated through the tvOS anymore. Through the OS anymore, and I think it's highly likely that that's what will happen here. What Ventura say they are offering is something quite different. They're not going to keep the revenue that is earned by the tvOS. They're going to kind of put that in a bucket and share it back with the TVOM. And he also went one step further, Will. He said that they were actually going to help a TV OEM that wanted to start their own business, advertising or fast or whatever, to run on their platform. They would help them do that. They would help them build that business. And that is very different to what you hear from the other tvOS providers. So I think for TV OEMs, I think this will give them real pause for thought to take a close look at Ventura. The only other TV OEM that I can TV OS provider rather that I can think of that is talking in this way is TiVo with TiVo OS. So I think it will be very interesting to providers to look at this as an opportunity to maybe for them to get more revenue to offset those low margins.
Yeah, I hear you. I thought that Matthew did a really good job of kind of describing the situation that TV OEMs and retailers find themselves in, which is basically watching as the TV OS companies are getting recurring revenue while they essentially get the one-time shot when the TV is sold. They get a small slice afterward, but really they need the recurring revenue, and essentially that the balance of power in the industry is off right now. The TV OEMs and the retailers are on the very short end of the stick, and they have these others, the OSs, that are now, of course, in the content business as well, selling ads, getting the longer end of the stick. And I thought he described this very well as that this is an existential problem for TV OEMs and for retailers, that if they can't own the customer, so to speak, on a day-to-day basis, then they're essentially mortgaging their future to big technology companies. And given, as you said, the wafer-thin margins that they have on selling TVs and the non-recurring nature of that, because people only buy a TV every, 5-6 years, they're really in a pinch. And so the OEMs are sort of the foundational layer to Ventura's success. And as Matthew said, that is where they're devoting a fair amount of their energy to get themselves into this market. I think it's worth just quickly mentioning, we asked Matthew about, essentially what is the pitch that the trade desk is making to the OEMs. And as you just touched on a few of them, I would just add that he highlighted that Ventura is meant to be a very simple integration for TV OEMs and retailers. There's a customizable branding opportunity. As you talked about the business model, he described as being very flexible. And, he asserted that the conversations are going well so far. I would just highlight from my standpoint, and I have never tried to sell anything into a TV OEM, so I'm not saying this with any firsthand experience. But Matthew did call this out, that they've already experienced the various, kind of layers and political elements within these large TV OEMs, who's responsible for various line items of profitability and expense. I think they're going to be having to work quite hard, the trade desk, in order to get Ventura in there. And he described different TV OEM strategies. In some case, they're already pretty well set on an OS. In other words, they have a more portfolio type of approach. Then there are still other verticals that are now interested in having a TV OS, like hospitality and airlines and so forth. So there are a lot of different dynamics in play in terms of the trade desk getting a foothold with Ventura. And I think they quite rightly recognize that this is, a critical part of the value chain that they need to crack, because without this, Ventura goes nowhere for advertisers, publishers, and viewers.
Yeah, you bet. And I will be remiss if I didn't remind our listeners that one of the things he said was they would never, ever, ever compete with the TV OEMs. So they're never going to launch a TV. They're not. So this is obviously one thing that pretty much all of the big guys have done now. But why don't we move on and let's talk about advertisers?
Sure. So again, the trade desk, this is their bread and butter, is serving advertisers on the DSP side, optimizing the spend. And from Matthew's standpoint, he highlighted that having this underlying OS, the Ventura, gives them better visibility into where the ad calls are going. He said in some cases they'll see 100 different opportunities for the exact same ad that they're helping to facilitate. And he believes, the trade desk believes, that the OS is really going to help to improve their visibility, which in turn helps advertisers to have their dollars placed as optimally and as efficiently as possible, which of course leads directly to a higher ROAS, a higher return on ad spend. So I think they see this Ventura as really being in service to the advertisers, in service to their core business of helping advertisers as best possible navigate their way through this very complicated new CTV ad world.
Indeed, yeah. And I think what the one other important component here, Will, is that with advertisers, this comes back to this transparency. I think they're not getting a very transparent transaction with the TVOS providers today. Some are better than others in this area, and I think having somebody like the Trade Desk and Ventura, where they're explicitly going to be as transparent as possible, will be a big advantage, I think, with the advertisers.
I would just, if I could just add one more quick thing. There's an old adage which I've always really enjoyed, which is that where you stand depends on where you sit. And I think that adage applies so well to what the Trade Desk is trying to do here. They are in some ways a representative of the advertising world as assisting in placing and optimizing ad spend. So that is where they sit. And where they stand is now to invest in Ventura to help facilitate that. That contrasts with, I think, the other TVOS players that are, I think, arguably more focused on the publisher side. They certainly want to facilitate ad dollars, ad spending, but that's not really where they sit. And so it creates this, I think, very interesting dynamic going forward of really who has the leverage in this industry. I mean, ordinarily the buyer is the one with the leverage, but I don't know that we've really seen that play out so much in the CTV world yet. So listening to Matthew and kind of thinking more about the sort of industry ad structure, the industry structure, it's going to be, I think, a lot of fun to see how this whole thing plays.
Yep, I agree, absolutely. And you mentioned the publishers. We should probably talk about them. I asked Matthew pretty directly about why would publishers like Netflix and Hulu, etc., Disney, want to work with them. And the first thing he said was apps would be more valuable on Ventura than on others. And he didn't really give us a firm reason for that. But reading between the lines, I think what he means here is that there will be no competition from the TVOS for eyeballs. He did mention that they, of course, already have a relationship with many of them, which is absolutely true because all of the main providers have launched ad-supported service, with the exception of Apple, of course. So they probably do have good relationships. But I want to really focus in on this competition from the TVOS, and he's absolutely right. The content providers are really faced with a difficult problem now because the main providers in the market all have competitive services of some shape or form on their platform that they are preferring to other providers. And let's talk about the market leader in the US, Roku. Roku, of course, has the Roku channel, which they say is the most popular free service on Roku. And I think in the top three, I think they said it's the third most popular, or maybe even the second most popular, quote, app on the Roku platform. They have just purchased Friendly TV, which is a virtual MVPD, and they have just launched an SVOD service called Howdy. So they are now competing with all SVOD providers, all virtual MVPDs, and all free providers, which is basically the entire suite of categories of providers in the streaming TV market. They're now competing with them on their platform, and you can bet that they're preferring their services on those platforms. Anthony Wood, who's the CEO of Roku, was explicit about saying that they are being extremely successful driving traffic into the Roku channel from the TVOS. People don't come in and launch the Roku channel, they look for content, and Roku prefers Roku channel content to everybody else's and pushes them there first. And this I've seen repeated on Vizio, on Fire TV, and on others. So he's absolutely right that content providers should see a fairer platform where their content is featured without preference over somebody else's.
Yeah, and picking up on that point, Matthew emphasized a number of times that a core principle of the trade desk is objectivity. And I think, to your point, that's one of the things that Ventura is trying to introduce into the tvOS market, is basically eliminating this idea that you just described of some sort of preference. And we'll talk about this in the viewer context in a moment, but he described how part of what happens when you have objectivity as one of your core principles is that it will reduce, for viewers, it will reduce the gap between pushing the power button on the TV and pushing the play button on the specific piece of content that you want to watch. And he described a world where I thought it was a kind of an interesting, fun way of describing it, where viewers are in some ways having to machete their way through a bunch of weeds in order to find the content that they're actually interested in. And I think he's dead right about that. I mean, all of us as CTV users have had that same issue where we turn on the TV, we know exactly what we want to watch, but finding our way to it becomes a process unto itself. And part of that process is, as you just said, because there are various biases going on from the underlying tvOS having its own content services. So I do think that's going to be very interesting from a publisher standpoint.
I do too. And that actually plays us directly into the users. And here, oh my gosh, this conflicted platform, as you say, Matthew highlighted very, very graphically with this macheting their way through. This is exactly right. I think it's actually pretty difficult to find stuff on a lot of the platforms. A lot of the promise of things like universal search and voice access is not getting it done. People are still spending way too much in the tvOS. And I will say, I mentioned how Anthony Wood talked about how people spending time in the tvOS was great from the perspective of the Roku channel because it was driving people in there. But it also lets them spend more time with the advertising that they're placing in the tvOS. So now there is a negative driver for the tvOS provider to help the user find content. They want them to spend more time in the user interface, not less, so that they can see the advertising. So I think this is a very interesting sort of corollary to this problem that we have. Anyway, users.
Yeah, and also I was just going to say, I mean, we're kind of maybe in a little bit of recap mode at this point, but also I thought interesting that Matthew, when I asked him specifically, like what kind of research has the Trade Desk done related to viewers' thoughts on tvOSs, that the first thing he said was that, quite honestly, viewers don't think or care a whole lot about OSs on their TVs. They just want to get to what they want to watch, and that's the extent of the relationship. He views that, and I think actually this is another opportunity for Ventura, is that he views that as an opportunity to add new value to the viewer's experience. And it's almost like when you don't know what you have, or when you don't have something, you don't know how valuable something could really be until it's presented to you. Think about the experience we all have with phones. If we didn't have that experience, we'd just be like, oh, whatever. But the fact that we do have these incredible experiences now with these phones that are driven by these incredible OSs, they make them really pleasurable experiences. So there's yet another angle that the Trade Desk is coming in on there, that sort of the general unawareness or apathy, if you will, that viewers have toward OSs. And, again, so we're kind of recapping here a little bit, but I thought your point earlier about Matthew's really emphatic commitment that the trade desk will not be buying content. In other words, it's not going to be in the business of being a streaming service and competing with publishers. It's also never going to make a TV, as you just said. And finally, it's never going to be standing on a stage trying to sell ads within a streaming service that it owns. In other words, no new front presentations for the trade desk, which we've certainly seen from plenty of the other sort of OSs and OEMs. So some pretty strong commitments on his side. And, stepping back, the trade desk is a widely known company in the industry. It's really an 800-pound gorilla in some ways. And their decision to invest in the OS market is potentially a major ripple in the industry, depending on whether they get these OEM deals done. It could really change the overall industry structure. They are known for their software prowess, and they have very deep resources. And this is something I think we both agree is going to be very much worth keeping an eye on as we go forward.
I do too, Will. It really is very disruptive to the TV OS industry. Basically, the trade desk is not going to make any money from Ventura. That's basically what they're saying. They're saying they make money from an improved ad market and their role in that ad market. So when you think about this, Roku has built a multi-billion-dollar company on the TV OS, and it primarily comes from advertising in that platform. So this is very competitive and very disruptive to the current way that the TV OS market is running. So I'm excited to see it launched. I just want to add one caveat. We are talking about a product and a platform that has not released yet. Who knows what it's going to look like when it actually releases? And, we've heard, how many times have we heard companies say, never, ever will we, and then bang, here they do it. And I need only point at Netflix with ads. They said they would never do them. They are doing them. So, companies change their opinion. They get bought. They change their priorities. So it may all change. But right now, very positive.
Yeah, absolutely. Point well taken, Colin. Companies change their strategies, decisions all the time. It's usually helpful to actually have a product launched before one can change strategy. Companies that change strategies for products that haven't yet even been launched are typically in trouble from the get-go. So let's see Ventura in the market first, and then we'll sort of evaluate from there. But anyway, the interview was a lot of fun. As you said earlier, we'll include a link. Heartily recommend listeners have a listen to that episode just prior to Labor Day, the interview with Matthew Henick, again, the SVP of the Ventura TV OS at the Trade Desk. I think that's all we have for today, Colin, right?
I think so.
Great. Thanks, everyone, for listening in, and we'll catch you all again next week.
Inside the Stream is a production of In-Screen Media and Video News, all rights reserved.